Hi guys. Today is a sideways day, I would say. And definitely we're going to go a little deep into this. We're going to talk a lot about not only just today, but also, what has been happening on for the full year and that. So, let's warm ourselves up and we'll get in here. I'll try to get this done in about 10 to 15 minutes. So let's work with it. Thanks, guys.
Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yo, go, go, go. Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave. To the system, I don't wanna be a slave. I've been doing shit my way, or the highway. And in the driveway is a nice range. Cause I grind through the climb, I invite pain. You'll never hear me, bitch, nah, I don't complain. Just gotta flip the switch and you can go and obtain anything you want, anything you need. Your mind's got the key ingredient, it's belief. They'll deceive with the negativity.
So today I wanted to cover not just today alone, but look at, year to date what's happening. And one of the key things I wanted to look at was something I saw on CNBC. They said this year stocks fall in 2022 final trading session as it wraps up the worst year since 2008. Now, sometimes you're blessed to be around 2008, and I was around 2008, and that's still fresh in my mind. I do remember back then I was in Jamaica, and I do remember when Bear Stearns was having problems. Then it was Lehman Brothers, and everything broke loose. Now this is a different situation, guys. We just came out of a pandemic. A lot of people were not working. Governments all around the world, including Canada and the US, basically just gave citizens money. And during that time, what would have happened is you're putting out a lot of money there. That money is entering the market. Production itself is not rising. So what was going to happen, we all knew, was inflation, because you have more money chasing the same amount of goods. So now they have to walk it back. And the thing is that, this year, anyone who invests in the stock market this year, at almost any point in the year, especially if they're in the growth market sector, they have lost money. A lot of people have lost money. I mean, unless someone was in oil and they were perfectly timed when Vladimir Putin invaded Ukraine. Those are the guys who made money. But the rest, a lot of folks lost money. So I wanted to cover just what's happening today. So today, the stock market is moving sideways. I mean, it's down, down 9.1%. Let's look at it specifically right now, what's going on. I like to use Yahoo Finance because, I think it's very nice. I used to use Yahoo years ago, and the only valuable thing I see from Yahoo right now is actually Yahoo Finance. So actually use it. So right now the market is down 0.66%. These are my stocks that I watch. I don't necessarily invest in them, but they're just things that I look at to get a feel for what's going on in the market. And SPY, that ETF, it's supposed to cover like the S&P 500 generally. And I like to use it because I like to see it and look at it, because when someone says the market is up or down, it's usually SPY. And then QQQ is NASDAQ. And so I like to look at NASDAQ to see where it is. And as you can see, all these from their 52-week high are way down, except Exxon. And Exxon, because of the fact that, that they deal with oil and gas and all of that stuff. And because of the whole Ukraine war, all of that happened. But people have been hit. Look at Amazon. Amazon is a darling. I mean, I receive at least 4 or 5 packages from Amazon. That's the height. Like I do receive that like every week. The height, right? I think because it's now holiday season and my wife is buying a few gifts. But normally we do receive at least 1 package a week. And so, this is a type of company that you don't expect to be down that much. And Tesla, as we know, it's down, significantly. All these stuffs are down. So anyone who has been investing in the market, they're been hit. And this is no joke. And what it means, past performance is not future performance. And what I wanted to tell people is this is not an investment channel, but this is this is, I think that we learn together, right? And we look at the market together. So today we can see that these stocks are basically moving either sideways or down. And one of the key things I wanted to look at with you guys is beyond that, what are the big concerns? I think one of the biggest concerns right now is recession. No one has been telling us if we are in a recession or we're exiting a recession. But one thing I did notice when I looked at the yield curve, it looked kind of recessionist. And I looked at the bond yields. And one thing I looked at was, and this was taken about an hour ago, but the 10-year treasury is 3.88%. I always look at it in this way. If someone had $1 million, put away, they're earning $38,000 a year off that $1 million. I mean, that sounds decent to me, right? And compare that to, being in the market or something like that, where it's not sure what's happening, right? And I looked at now the shorter term yields. Now, the one that was really attractive to me was the 1 yearly, the 52-week, 4.73%. Now, that's really significant compared to when, interest rates were pretty low, almost approaching 0.5 or 0. So these are the yields that people are seeing now. And as think about it. If you were a fund manager and you ran a pension fund and you had your money invested in stocks, it's all about allocation, right? And the pension manager will see 4.7%. They could even lock in at a 10-year 3.88%. They're rational people, right? And sometimes that's why the market itself moves down, because people are seeing better deals and all of that stuff. But I wanted to take a deep dive into stock, not just for today, but more longer term. And what I started to look at was PE. And you have trailing PE and you have forward PE. Trailing PE is just based on past earnings. Forward PE is based on estimation. I hate using forward PE for one main thing, because forward PE basically is an estimate. And as you know, estimates of the future are difficult. They're quite difficult. And in a a cash rich environment like what we had a few years ago, of course, forward PEs, people are always beating earnings. But as we have seen this year, people have missed earnings. So what's the value of the forward PE at this point? So just looking at it from a trailing PE point, all PE is saying, what am I paying for $1 of earnings? And that's important, right? And so some companies are rich. Like you can look at Amazon. You're paying $73 for $1 of earnings. And that's why that stock, unless it has growth, I don't know where that stock is headed, right? And as I said, I'm not a financial advisor, but $73 PE is quite rich. That's very rich. And you look at some stocks like Tyson Foods. This is a stock that I plan to do a lot more on. And the reason is chicken and poultry and pork. People will always eat poultry and pork. And if you have been going to the supermarkets, or that I order my groceries from Walmart, if I see the chicken price goes from $8.99 for a whole chicken to $10.99, I'm still gonna buy chicken, right? And so Tyson Foods is one of those that I'm kind of watching. I keep it on my watch list because one of the things I say, with a PE ratio of 6.9, it looks attractive. And as I said, guys, I'm not telling anyone to buy any of these things. We're just looking at it together, right? And Qualcomm, they make the modems for the iPhones and other phones and that. And so that's a tech company. I look at them a bit. I'm not sure about it because at any point in time, Apple can build their own modem. Netflix, 27 PE. For me, that's slightly rich because I don't think Netflix has the it's not as compelling as it was before. You have Disney Plus and you have Paramount TV, you have Peacock Network. So I don't know about that. Disney, I like Disney, but 47 PE is pretty high. But I like Disney, and what I love most about Disney is that they have captured a large part of the entertainment industry, because Marvel, Star Trek, Avatar, all of this stuff, they're doing so it's a company I watch, but that PE kind of seems away, right? And then Meta, this is the one that I am very, very, very intrigued by. And one of it is, you have the face, because Meta is really Facebook and Instagram. You have Facebook and Instagram with a PE ratio that's close to a bank. And that's a very low PE ratio. But here's the problem. The problem is that I have not logged into my Facebook account for a long time. I mean, I do go on Instagram, but I'm spending less and less time on Instagram. I spend most of my time on, researching stuff on YouTube. I find myself now a bit on Twitter Spaces, which is funny because it's more people talking about, there's a lot of people talking about crypto and Tesla stock and all that stuff. But what it is it's more constructive discussions, I find. And I think that Twitter Spaces, part of Twitter, will be pretty good. So for Meta, my big thing with Meta is Mark Zuckerberg's gamble with the metaverse. Will it work? And I don't know. What I want to see is more earnings, and we'll get into that as soon. That earnings are going to tell me what's happening, and when we get into those earnings, we'll start to see what's happening with all of these stocks, right? So I'm looking out for about the 24th of January, when you get Microsoft coming in. That's going to be big. Intel coming in the next day. Tesla is going to be the big day, right? And then Apple moves the market. So we're going to see how iPhone sales are and the projection, because a lot of it will look at the projection. And then Meta comes on February 1st. So February 1st is going to be pretty big. Qualcomm, as you know, we watched that. So it's going to be very, very interesting, about that time. And I do expect, and as I said, I'm not a financial advisor, but do expect the market to move sideways before that happens. Because right now, the market is looking for a catalyst, I think. And the shorts, I believe, are now scared. And also the bulls are scared. Everyone is scared because they don't know what's next. And they don't know what the forward projections of a lot of these CFOs will be. So there's a bit of, people are a little scared, right? And as we go up the list here and we look at something like Chevron is oil, right? This one I wanted to take a little foray in because I was reading something about Vladimir Putin and the fact that, well, not the fact, there is some speculation that, he's taking some cancer medicine and it's impairing his judgment and all that stuff. And I've been hearing him talk a lot of wild things, especially about war and all of that stuff. War, Russia means oil prices go up. And I don't know what's happening. I'm not going to speculate on that. But Chevron is a company that and Exxon, both of them I'll look at. NVIDIA, this is a company that is very interesting to me. And the reason why it's interesting to me, they build a lot of the graphic processors. And gaming is, people do a lot of gaming. But one thing I know, people have to get out back to work. So I'm not sure if a lot of people spend as much time gaming as they did before. And then also Bitcoin mining or crypto mining, people use these graphic cards for it. I'm not sure if that's doing that as well as it did before. So I'm not really, that compelled about it. And definitely with Tesla, I am on the sidelines just watching it. I think after January 25th, and we see the results, we'll see. JP Morgan, stable bank, that's one of the companies that I can just say I feel it's stable, but we'll see what the earnings meet out to be. And we spoke about Amazon. Alphabet is the one that, a lot of people are looking at. 18 trillion PE right here. That's 18 trillion PE is significant because, if you're watching this video, you are on an Alphabet product, which is because Alphabet is Google, and they own Pixel phones, they own YouTube, and Google search and all of that stuff. And with an 18 PE, that is tremendous. That's tremendous. But as I said, I'm waiting for, the earnings that come out and see what happens. Microsoft is a darling of the stock market because, Microsoft, especially Windows and also Microsoft Office, they're just tremendous. And Microsoft has done some fantastic moves. So, that's always a stock. That's always a company that I admire. Apple, as we said, we'll see what iPhone sales and projections look like once the first quarter the earnings come out. And the rest of them are ETFs practically, although Dow is not an ETF. I need to move that. It should be DIA. But anyhow, one of the key things, as I said, we spoke about bond yields, we spoke about stocks. As we close out this, the one thing I'll say about as we close out, this program is next year will be an important year. And why it will be an important year, as we said, a lot of folks are underwater in their stocks. And, being that they went in last year very hopeful because, last year, 2021 into 2022, they were very hopeful of the stock market. Everything came crumbling down, as we saw with let's go back to this. Everything came crumbling down from the highs. When we look at these from the 52-week high, everyone is low except for the oil companies. And who would have known in January that Vladimir Putin would have invaded the Ukraine? But so a lot of folks are reeling from last year and they're going into next year. And past performance is not an indicator of future performance. So we'll see what happens. I am, as I said, people have a choice, and the big choice that they have is how they do their allocation. And my big allocation thought process is, people have to figure out what they have in cash, what they have in bonds, what they have in equity, and then what is like growth and what is like more value, because value stocks are stocks that people expect dividends from and they're stable, and then growth are the ones that are more speculative. And then some people may want to put things in crypto. I am not a fan of crypto, but as I said, I'm not a financial advisor. But the choices are, number 4 I have there, jump in, stay on the sidelines, or wait and see. For me, I am between stay on the sidelines and wait and see. But definitely right now, I think that it's going to be very intriguing next year. 2021 into 2022, people were hopeful of making good profits, but the year didn't turn out the way they wanted. 22 into 23, who knows what may happen? It may be a continuation of 22. It may be a bit of a slight recovery. Who knows? But you know what? I'll keep watching. As I said, I won't be able to do this on a daily basis. I'll try to do this more as either week wrap-ups or a midweek coverage and end of week. But as I said to anyone, be careful, and that because you work hard for your money, and make sure that you go to a financial advisor when you make your decision. This is just for entertainment purposes. Thank you, guys.